What's up, guys? It is Troy P here today, and we will be going over risk management part 2. So in today's episode, we're going to be going over how to use a Forex calculator, risk a certain percent of your account, and maintain an overall profitable trading strategy in the long term. All right, guys, now that we have everything set up, let's get into what is an FX calculator. So this tool right here on the screen is what's known as an FX calculator and is provided to us by Baby Pips. So there are more convenient ways to do this. There's apps on the App Store called Stynu. Just look up Forex calculator and see what's available. And basically what you need is a calculator that will use your account balance, risk percentage, and your pips and stop loss in order to calculate what your lot size should be. So we're gonna go over a live example here and show you guys what it actually means with a live trade. And then we'll wrap up and get ready for tomorrow's session, which will be actual live trading using the past 2 weeks data and education content. So the account balance that we're going to stick with is a $5,000 account. And you never want to risk more than 1 to 5% of your overall account. So depending on the account size, if you're under like $1,000, then 5% might be okay so that you can get those bigger returns than just a couple of dollars. But you want to keep in mind that you are trading live and you have to proper practice risk management. So the risk percent we're going to stick with here and that I always use is 1.75%. And let's say that we are trading the euro pound and we are going to take a short position where price is currently at 8.565 will be our entry point, which you can see here. And our profit level, which will be, because we're taking a short, down here around 0.8545 is where we will stick this take profit level. Our stop loss will be right below this daily high, which will be an 8 pip stop loss, giving us a 2.5 risk reward ratio for this trade. So from here, you can take away that we have an 8 pip stop loss and that we're risking 1.75% of our overall $5,000 account. So as easy as magic, all you have to do is hit this little calculate button, and it's going to give you that your lot size should be 1.0938. So this is super important because this introduces twin trading. So what twin trading is known as is when you have multiple take profits set in one trade. So say I want to set my first take profit right here so I don't have to fight that resistance zone, and then I set my second take profit right here, and then we have 3 take profits, boom, boom, and boom. So the reason that we do that is because when price comes down and hits our first take profit, it could be meeting a new resistance zone. So instead of it coming back up and stopping out and actually ending up as a losing trade, we move our stop loss to break even. So what that looks like visually after we set that take profit is that this stop loss then moves all the way down. So we're clearly not going to do that so that you guys can see the full position, but just know that in MetaTrader 4, you're then moving your stop loss level from up here to the break even point at 0.8565 once this area is completed. So the reason that this is important to overall risk management is that we need to break up our entries into 3 different positions. So we'll need to open a position 1, a position 2, and a position 3 because we have these 3 take profit levels. In order to do that and practice proper risk management, we need to break up this recommended standard lot into 3. So what I would do here is I would enter 0.5, 0.5, and then I would enter 0.1 or 0.09. And the reason for that is because I would always set the smallest entry lot size going down to take profit 3, and the 0.5s can be set at these levels right here. So that might be sounding a little hard to visualize, which is why we're going to wrap this up in MetaTrader 4. But before we do, I just want to make sure you guys would know what that looks like before we do. So this first take profit is a 0.05 lot, or a 0.50, sorry about that, guys. And then our second take profit is the same. We're using that other 0.5 to get there, and that's 1 full standard lot out of our 1.09 that we're using. And then we would either have 0.1 or 0.09 going down to this third level right here. And the reason that we keep the smaller one is because it's more pips, which means more returns. So that is why we do what we do. And then you might be asking, okay, so how do I know my returns based off of that? If you watched our last video, you'll know that 0.5 is equal to 50 cents per pip. Then you would just have to do the little trick we taught in the last one and take profit 1 minus our entry point, which would be 65 minus 56.6. And you would get an easy answer of 11.4. So hopefully, or 9.4, sorry. And hopefully that this is starting to make sense of how to take these numbers and just subtract them and do it pretty mentally. Sometimes you're going to be making mistakes, especially when you're moving fast, but the more practice you have, the easier it will come. So let's get into MetaTrader 4 now. I fully forgot to make sure that I told you guys, always make sure that you are choosing the currency pair from this list right here. I originally had Euro US dollar on, which gave us 1.0938. But luckily the Euro pound that we just charted for you guys over here on TradingView also gives us 1.0938. And the reason for that is because they both use the Euro as the base. So that's going to be the same pip price. So now we're getting into MetaTrader 4. All right, guys, now that we have everything set up on MetaTrader 4, let's go over our first example of a live trade. So here we have our Euro pound trade short, and just a heads up, I see this already moving towards our stop loss. No kind of analysis was done before this entry. So if you want a real live trade, tune in tomorrow where we'll actually be doing analysis, then entering these. But keep in mind that there is the 0.5, 0.5, and 0.1, which equals the 1.1 total lot we were supposed to use to risk 1.75% of our overall $5,000 account, which you can see down here in our $5,000 balance. So we're going to actually go ahead and enter this trade. We're already in the red with it, but we haven't actually gotten our entry into it. The actual risk might be a little bit off, but let's just keep moving forward anyways. So in our chart, we come in here and see that price is at 0.8567, which is only really 2 pips from our entry point. So we're going to sell that. We're going to enter with a 0.5 lot as a sell. You see the first one come down. Do that again, and then we get that last 0.1. So obviously you're not going to always have matching entries, but right here we got ours at 0.85675, which we are going to edit right now. So you can see we have an even better risk reward ratio. We're only risking 5.5 pips, which you should be able to quickly calculate the 1.1 lot. So we'll just show you what that looks like on Safari. So all we need to do here is know that we're risking $11 per pip, figure out how many pips we're risking, which is 5.5, and then we have our expected stop loss value of $60.5. So that's how much we're risking with this trade if they all hit stop loss. So let's go ahead and put our stop loss in at 0.8573. And since this is a 0.5, it doesn't matter if we put it here or here, but we're going to use the 0.85566 as our take profit level. So 0.85566 and set that. So you can see that we're already within our 10 pips of our stop loss. Clearly, since we only have a 5.5 pip stop loss, that is where we're at now. Then we are modifying this next one to be 0.8573. Then this next take profit level will be at 0.85503. And then a last entry for our 0.1 will be our take profit level down at 0.8545. With a stop loss at 0.8573. So toggling between that, it all looks good. Clearly, this is the charts that we're looking at now. We are on the, I believe, 5-minute, and we're going to zoom out to the 15-minute. And you can see that this is where our take profit level is going to be up here, and this is going to be our stop loss down here. Sorry, I didn't have this up. This is our stop loss up here. These are 3 different take profits, which you can see on this side of the screen right here. So we walked you through that pretty quickly on the Forex calculator. I just want to reiterate what we're trying to teach you here is that you should always properly manage your risk by knowing exactly how much you're risking ahead of time and how much you're looking to be rewarded ahead of time. So just for this 0.5 entry, which is $5 per pip, and it is moving from our entry point of 675 down to 56.6. So that's going to be around 12 pips ish. Let me get the exact number. 675 minus 56.6, so 67.5 minus 56.6. Sorry, I don't know it off the top of my head, and they're not very clean numbers, which doesn't help a ton, but we are risking 10.9 pips, and since we have that first 0.5 going there, we will be looking to be rewarded 10.9 times that first 0.5, which would be $5 per pip. So we would have $54.5 from closing this position alone, which already cancels out our stop loss. So you have to think of each one as a position. This is a position, this is a position, and this is a position. So that's part of twin trading. You should now understand that we're risking an overall percent of your account, which is super important. So here we risked 1.75% of our $5,000, which actually is exactly what our stop loss will be if you calculate the 1.1 lot, which is $11 per pip times that what originally was 8 pips but then moved to 5. That'll be under a certain percent of what you're willing to lose. So this is how you set up a trade, guys. Hopefully it's making a little more sense. If it's not, tune back in. Tomorrow we're going to be doing live trading with this, also incorporating some strategies and just showing you guys some stuff. It'll be a little bit of a longer session, so definitely hope you guys can tune in. I'm Troy P, and hopefully this video has helped you guys. I'll see you next week.